Good morning. It is almost noon UTC on, what is it, Tuesday the 26th? Yeah. So, just in general, looking at the stuff we got coming up this week, we got the FOMC minutes later tonight. Expect if the minutes have some kind of revealing, juicy info on predicted or expected interest rate decisions in the future. Could be something, but definitely something that people will look at based off of reactive to the market. The big stuff starts happening tomorrow morning. It is as it is the last full trading day, I believe, of the week for the New York Stock Exchange. There's a lot of stuff going on, especially with it being Thanksgiving on Thursday. But an hour before the New York market opens tomorrow, watch it. We're going to see some volatility based off of the data points that are coming out. Looking at the long short ratios for Bitcoin specifically, as expected, as we've been breaking down, longs have flipped the long short ratio. So now we are primarily long versus short. This is still expanding as in the last couple hours we've been dumping with the bigger moves starting to happen as we started nuking yesterday at the market open. So keep in mind that we are now more long than short. So there's a good incentive to actually push price lower to get people to start, wrecking out the late retail longs, which is typical for the market. Funding rates. This is an interesting one as we've already broken down a couple thousand dollars on the Bitcoin price. Funding rates are wildly bearish still across the board, across Binance, across everyone. They're all seeing this as an opportunity to build back their short books, incentivize people to take short positions to build that back. So we have broken some levels. We'll talk about 96K and the importance of it, but yes, it is happening. Looking at the liquidity right now, we're getting down to some really good stuff, higher time frame. We broke down, we did a little bit of a pump move to try and get into it on the 25th, so yesterday in the morning, and then going into the failures that broke us down very heavily. We're now down to some pretty decent stuff, getting close to 90K. If we get to a 2-week outlook, we'll just look at that as it loads. Based off the liquidity that we have in the zone, I would suspect that if we don't fail somewhere, stop with the down, get some kind of good bounce here, we should probably see some stuff down at like 90.8K, potentially all the way down to about 89.8, just getting underneath that 90K zone where we start to get into kind of like the danger zone of losing levels. At no point do we want to ever get back below 85K. That would probably be the worst possible move right now as far as bearishness, but testing structure. It would wipe all of the longs that we've already previously done, but that is the max pain point. I would say that no matter what happens, we will get a bounce from that move. I'm expecting it to hold if we do go down there. But the local stuff is very simple. We've had some moves down. There's some good, juicy, long liquidity going all the way back to the 19th that we'd love to get taken out from that zone. This will likely require us to build out a larger structure, stack that short liquidity to the upside, as there's a lot of heavy resistance holding 100K. If we do have a general regain of level, yes, we should see a breakthrough of 100K, but we're still far and away from that. So looking at the chart, just in general, what we're seeing here, just going to brush out. The biggest thing here was the flip at 96K. This generally means that if we, this is the loss that broke the upside range structure. It was nice. It was a clean failure and a clean break back down to our next major level at 92.8K. I would expect that any regain of this, so if we do this play out where we had a regain, we should see a move right back into the highs around 94.5. Realistically, I'm still seeing this as a potential test failure. So like the first pump into this move into 96K is a potential short back lower. We do have some localized supply being created with this kind of red zone here as well. And we have had a pretty big failure back into this like 91K zone. If we don't have a hold here, if we don't step off from where we are right now, any new lows from here, I'm expecting probably sub 90K price action. There's some overlapping demand here. I think it's a good opportunity to regain. But again, you have to take this from a realistic approach. Are we gaining or losing levels? The best way to look at this is to invert the chart, zoom out a bit. What are we doing? We're actually regaining levels that we've lost that led us to the lows. So if we're regaining levels with the chart inverted, we're breaking structure back up, or reinvert the chart, we're breaking structure back to the downside. So we want to get back above some of these key things. 92.8 is going to be a very key structure, as well as the daily open, to at least regain some local priority. That would be very bullish as an overall test. If we do have that continuation down, which is still the priority now, since we've broken ranges and gone lower, we would want to continue shorting that into the downside move. I would expect at any point, if we get down to 87.3K, we might get a wick underneath, but I don't see any close under that. Otherwise, we're generally failing the upside structure, and we'll see a significant retest, probably back towards 70K to fill some old CME gaps. So for the time being, I think it's really simple. You're in a downside move, play it as such. The regain that matters, set an alert, probably even here at the daily open at 93K. That's an easy one just to, gain 93K. You want to see a nice $1,400-$1,500 move up to about 94.5 to at least retest stuff. Until that happens, every level right now is a potential short. The higher time frame is still technically good. We are still holding high time frame up. The things that start to break stuff is losing that 89.8K. Losing this level is definitely a break for a high time frame down. It doesn't mean the bull runs over. It just means that we have a much deeper retracement. Because we've had this upside move, watch us farm out some structure with a big descending curve, a big descending triangle, and as those shorts kind of build back. The more shorts that stack and the higher we hold on the support below us, the more likely it is any regain that starts to get us back up above these supply zones, above 89K, 98K, is effectively a way to break us out through that upside move. But because the funding rates are so bearish and the long short is flipped long, we're definitely priority down until we see a regain of level. So that's that. Take it easy and yeah, play the price action. Don't get emotional. Set your limits, set your orders, and play it as such. Make sure you have good conditions about gain or loss of level, good conditions of invalidation for trades, and don't get emotional. So that's that. Take it easy. Catch you tomorrow.